also have with us Aamar Singh, Senior Vice President Research at Angel One. So talk to us about how you're looking at markets. Of course, a wee bit of weakness coming in, 19,600 now starting to become visible again.
Yeah, the way the markets have been witnessing some sell-off at higher levels, backed by, I would say, global cues also, and extremely high crude oil prices, because crude oil prices, the way they have been sustaining over the $90 mark. So that clearly is a cause of concern, because that would put a roadblock for central banks for any rate cut in the near future. So markets are, I would say, taking that. Apart from that, the Chinese turmoil in the real estate sector, that also is having an impact. And our markets were anyways ripe for some sort of selling in the large caps, because be it Reliance, be it HDFC, be it ICICI, we've seen some sort of selling pressure being built there. And technically, if you ask me, clearly there were signs that there was some decline in momentum post the record highs that were made. And if you look at Nifty right now, somewhere around 19,500, 600, this is the current level. These are very crucial support zones. So 19,500, 600 is a crucial support zone for Nifty, from where we could expect some bounce back. But the bounce back is likely to, I would say, it would be subdued till the time we don't see sustaining above the 19,900, 20,000 level. Because now that's good, because that was the earlier record high which the market had respected. Then the market took off post that level in the first week of September. So clearly, that tells that there is some sort of selling pressure. Also on the open interest side, we have seen some sort of short buildup that is happening. So that tells that there would be some selling pressure as far as Bank Nifty is concerned. Again, Bank Nifty also, we are seeing similar patterns. Bank Nifty's got strong support coming around the 44,000 levels, upside resistance around the 45,000, 45,200 levels. And technically, Bank Nifty is on a weaker wicket as compared to Nifty. So that's one thing that needs to be taken into account. So we would say that in Bank Nifty, we've got a double top formation. In Nifty, we are seeing some sort of consolidation, but one needs to be slightly cautious. The silver lining is we don't see much of an upside or spike in the India VIX.
Understood. Got it. Let me try and also pull out two sectors. One is the Nifty FMCG, which is languishing in trade 0.9% lower, and you're seeing Nifty IT also down 1+%. Now, this is a dichotomy, right? Because on the one hand, you have FMCG, which is a pseudo for the domestic consumption story playing out, and you have IT, which is, of course, under pressure on the back of global cues. How should one tie that in? And do you continue to expect pressure on some of these sectoral indices?
Yeah, I would say, talking first about Nifty FMCG, it had a dream run, there's no doubt about it. But over the last, I would say, 6 to 8 weeks, we've seen some sort of consolidation. The long-term trend still remains positive, but I would say the intermediate-term trend, the short-term trend clearly points toward more of consolidation. And there is a clear lack of, I would say, upside momentum. So having said that, it would mean that most of the stocks in the FMCG are likely to trade in a consolidation zone. We could see some sort of profit booking as well. As far as Nifty FMCG is concerned, very crucial support zone is around the 50,000 levels, whereas again on the upside resistance would be around 52,200. So it's more of a consolidation for Nifty FMCG. Talking about IT, again, IT, I would say even the long-term charts are not very bullish, meaning they are positive, but they don't really inspire that much of confidence. So what we could witness in Nifty IT is that some of the IT stocks would perform better, but the large caps, till the time we don't see Infosys and TCS really firing, we could see some sort of consolidation here as well.
Right. Aamar, if I can ask you, how do you look at the broader markets? Because those have been on a tear this year. You seem to suggest that, of course, the benchmark indices are going to be under pressure. How do you view the broader markets, maybe the mid cap and the small cap?
So talking about the small cap, what we are seeing here is that small cap, the market structure is completely different as when I compare it with the large cap, or when I compare it with Nifty. Here the momentum is very strong. we've seen some sort of correction. We've seen some sort of consolidation if I'm talking about the small cap index. So that tells me that this is a consolidation. Still, it would be too early to say that there is a trend change or a top has been made. So that something is of very great importance. And looking at if I look at the mid cap, somewhere on the mid cap, so Nifty mid cap is also very strong technically on the charts. So one of the technical indicators, they point towards overheated market. So what it effectively means is that upside is likely to meet with some sort of resistance, because investors would also be looking at the risk reward ratio, and the smart money would definitely look at how the risk reward ratio plays out, whether it's a good time to enter or whether wait for a correction. But if you ask me, as far as the structure is concerned, mid cap, large cap, they continue to be very strong technically on the charts. Yes, on the short term, we are seeing some sort of consolidation. Effectively means that there could be some sort of correction or consolidation, but there is no trend change from a medium term or from a long term perspective.
Hi Amar, good afternoon. This is Vinny here as well. I want to also understand in terms of some of these stock specific moves. I'll look at something like a CE Infosystem, I beg your pardon. That one is, buzzing away in trade as well. Anything on the technical front that is looking interesting for something like this?
If I just, which company you mentioned?
Infosystems.
So, yeah. Actually, I'm not able to.
I believe that's Map My India,
Map My
right?
India, yeah.
Map My India.
Okay. Yeah. Looking at this stock, the stock is I would say is trading at record highs and very strong technically on the charts. And what we've been witnessing in the last couple of days is that the volume has increased significantly. So that's significantly higher, because this sort of volume was once witnessed on 14th of July. And post that, we are seeing extreme high volume. So this is one stock which is quite strong on the charts. Technically, it's around 2030 odd levels. But I would say the stock has been, I would say, more than doubled since April. So I would say one needs to be slightly cautious here, but the trend continues to remain positive for the stock.
Okay. And also, Amar, what are your top picks that you're looking at in this market? Anything coming from those PSU bank side?
Yeah, I would say PSU banks, we've been bullish for quite some time, and still they are not showing any signs of, I would say, decline in momentum. So one stock one can look at is UCO Bank. It's currently priced around 44, 45. It's trading at significant highs. So this is one stock. And technically, the best part is that the structure of most of the PSU banks continues to be very strong across time frames. So that's one very strong aspect. And also, we've seen some significant volumes built up over the last couple of weeks. So PSU banks, amongst that, UCO Bank is one. One can look at buying around current levels with a stop loss of 41.3 and a target of 53 on the upside. And the other stock to look at is, again, from the PSU space, and that is BHEL. Here also, we've been bullish for quite some time on BHEL. The stock did rally towards 150 currently. It's around 130. It's very strong on the charts. Short term, yes, we are seeing some sort of consolidation. This consolidation could last, so that could be a buying opportunity here. So anywhere around the current levels, 128, 130 is a good buying opportunity with a stop loss of 121 and a target of 145 on the upside.
Thank you so much for that, Amar. We'll let you go on that note. Great perspective there. Let's quickly